A note on X by the United States Trade Representative yesterday says Nigeria's import ban on 25 different product categories impacts U.S. exporters, particularly in agriculture, pharmaceuticals, beverages, and consumer goods. Restrictions on items like beef, pork, poultry, fruit juices, medicaments, and spirits limit U.S. market access and reduce export opportunities. These policies, according to the U.S. Trade Representative note, create significant trade barriers that lead to lost revenue for U.S. businesses looking to expand in the Nigerian market. President Bola Ahmed Tinubu's economic management team in Nigeria yesterday disclosed plans to meet soon to appraise the various scenarios in the ongoing trade war and advise government on the way forward. Hello, this is Global Business Insights, where we look deeper at the main business stories moving markets all over the world. The trade war is fast spreading, and it seems there will be no prisoners. The Times call for all countries to be alert to their advantage and competitiveness and areas of vulnerability, and of course work out appropriate defensive and attack strategies, also noting there will be no free lunches. Even if countries agree to zero tariffs, as some have, the issue of non-trade barriers will make negotiations difficult, and it is unlikely the US will shift below its 10% tariff baseline, even where zero tariffs have been put on the table. Still, it will be easier to export from places like India, from, say, China, and many will be re-strategizing on their supply chain positionings. Jamie Dimon, in a note yesterday to shareholders, said time was of the essence when it comes to the impact of tariffs. He added that the quicker these issues are resolved, the better, because some of the negative effects increase cumulatively over time and would be hard to reverse. Dimon hoped that following negotiations, the long-term effect would have some positive benefits for the United States. However, he added his most serious concern is how this will affect America's long-term economic alliance. Are we seeing a global reset or a global decline? Is this America first or America alone? Jamie Dimon's note does not exactly say. Despite the upheaval in stock markets, there are stocks still looking up. For example, Trump has ordered the proposed acquisition of U.S. Steel by Japan's Nippon Steel to undergo a new review after being initially blocked by Biden. U.S. Steel closed up 17.2% yesterday. At the end of the day, the Nasdaq managed to close up, S&P just slightly lower in a day of whipsawing and unnerving volatility. The day started with a huge downturn. That's at Wall Street, but shares with stronger potential picked up later. It looked like a stock picker's market, as highly valued stocks were looking too cheap to resist. The market was unusually volatile, swinging up and down, even as the rumor spread that the US was pausing tariffs for 90 days, and that led to a quick reversal, only for the White House to deny the news as fake. Apple spread the news also that it is shifting more of its iPhone production to India as a short-term solution to offset the rising costs imposed by China duties, while it attempts to win an exemption from high tariffs. Making matters worse for Apple, the US administration threatened an additional levy of 50% to take effect on April 9 on Chinese goods unless it withdrew its retaliatory tariffs. Apple, which does the majority of its manufacturing in China, is one of the most exposed companies to a trade war. China has a potential incoming 54% tariff rate, and that's before the new increases. Smaller tariffs were also placed on secondary production locations such as India, Vietnam, and Thailand. JP Morgan Chase analysts say Apple could raise its prices 6% across the world to offset the US tariffs. Other analysts say if Apple does not raise prices, it could suffer as much as a 15% cut to earnings per share. UBS say the iPhone 16 Pro Max could go up as much as $350. Indeed, Apple is a big loser here. But there are other winners and losers. The obvious ones in terms of winners would be discount consumer staples, where the impact of tariffs would be negligible and sensitivity to price changes will be almost nil. This is for purchase of products that are essential or that you will likely purchase regardless of your personal finances or how the economy is performing, like food, tobacco, drinks, and household and personal care items. And all these are considered consumer staples. Dollar Tree was up 7.8%. Other winners would include healthcare and utilities. AI niches like Nvidia will also continue to stand out stronger as we see a divergent Magnificent Seven. Amongst the Magnificent Seven, Nvidia was the best performer on the Dow, rising 3.5%. Apple was the worst, falling 3.7%. Amazon was up 2.5%, making it the Dow's second best performer. Facebook and Meta rose more than 2%, while Alphabet was up nearly 1%. Tesla sank 2.6%. Other stocks not likely to do well, apart from China-exposed stocks like Apple and Nike, will be the electronics sector. Capital markets players like issuing houses will see IPO slow down, and that could affect investment banking, which tends not to do so well in a bear market. Luxury, leisure, and high-end clothing also likely to be laggards in this scenario. Long-term, perhaps younger players who can look farther ahead still can invest confidently, noting that if they buy consistently through downturns, such as the one that we have, they will have lower prices for their investments, which is almost certain to boost returns over the long term. In a decade's time, the worst markets look like short-term blips. Indeed, a historical upward trajectory of the stock market over the years makes present challenges appear not as bad as it looks. Other business stories. Let's look at Japanese stocks rebounding at the open of the Japanese market today after yesterday's historic sell-off, and also after the US administration said it would start trade negotiations with Asia's second largest economy. The ECB is highly likely to cut borrowing costs next week and again in June as Trump's tariffs risk pushing the bloc into recession. Investors are pricing in a 90% likelihood of a quarter-point cut in interest rates at the next ECB rate setting meeting on April 17, up from 70% before tariff announcement. That's a probability of 90%, up from 70% before tariff announcements on April 2. They expect 2 further cuts by the end of this year, with a chance of a third. Germany's Chancellor-in-Waiting, Friedrich Merz, has warned of the dramatic impact of US tariffs on Germany, adding that the situation on the international equity and bond markets is dramatic and threatens to deteriorate further. He concluded that it's more urgent than ever for Germany to restore its international competitiveness as quickly as possible. Ursula von der Leyen said the EU could scrap tariffs on American industrial goods if the US agreed to do the same. The president of the European Commission said that Europe is always ready for a good deal, adding that the EU would seek to strengthen trading ties with countries other than America. Trump has said the EU must also buy energy from the US to rebalance the traditional allies relationship. Goldman Sachs has raised its odds of a recession in America to 45%, up from 35% last week. Also, commodity prices such as Brent crude, that's the oil price benchmark, fell to below $64 per barrel, down from $74 on Wednesday. Oil prices slid 2% to a near 4-year low yesterday. Broadcom said it was launching a new share buyback program of up to $10 billion set to run through the end of the year, sending its shares up nearly 3% in extended trading. The move, according to CEO Hock Tan, reflects confidence in its semiconductor and infrastructure software franchises and also in artificial intelligence related investments. South Africa's trade minister has said African nations should pivot towards other markets like China, adding that recent tariffs nullified AGOA, that's the Africa Growth Opportunity Act, a deal that offered U.S. trade concessions to several African countries. Paxtao, that's the trade minister, said the African Growth and Opportunity Act with the U.S. In effect no longer applies in light of Trump's tariff decision, meaning African nations should shift their trade towards fast-growing markets, including countries from the global south. Sweden has announced the opening of its largest innovation hub in Africa, located in Lagos State, Nigeria. The announcement was made yesterday during a meeting between the Vice President of Nigeria, Kashim Shettima, and Crown Princess Victoria of Sweden at the Presidential Villa in Abuja. Also in Nigeria, the Debt Management Office has opened its April 2025 Federal Government of Nigeria Savings Bonds offer with interest rates up to 17.046%. U.S. investment bank Goldman Sachs said in a note that bond pricing inferred that markets believed there was 70% probability of a Ukraine peace deal, up sharply from before the November U.S. election. Asia-Pacific markets mostly higher, rebounding from previous sessions' losses over U.S. tariff policies as trade negotiations progress. Japan's economy minister, Ryosai Akazawa, has been named as trade negotiator with the United States. The appointment came after the Japanese Prime Minister and Trump agreed to initiate bilateral discussions on tariffs in a phone meeting on Monday. The Chinese Commerce Ministry has said it will fight U.S. trade policies to the end, adding that it resolutely opposes Trump's threat of escalating tariffs. Beijing vows to take countermeasures that will safeguard its own rights and interests. This was after the U.S. threatened an additional 50% tariffs by April 9 if Beijing did not lift its duties on U.S. imports. European markets also opened higher, reversing course from a 4-day losing streak fueled by global tariff tensions. Well, that's all on this episode of Global Business Insights. Thanks for watching. This is Bode Oshosami. Bye-bye.